Thursday, February 26th. The market's been open for a couple of hours and it is down 0.75%. I'm doing a little bit of an early show today because I've got a travel day tomorrow. And then the beginning of next week, I've got some travel, a couple of travel days as well. So let's talk about today's show. We're going to cover a few things: broadening trade. We're going to talk about earnings reactions. We're going to talk about a comment from Jensen Huang of NVDA. We're going to talk about a reminder of the difference between the stock market versus the economy. And then lastly, we're going to talk about geopolitical risks. We're going to do all of that in about 10 minutes. So let's jump in. The broadening trade. Basically, since last October, the bottom 50 stocks of the S&P 500 stocks, those bottom 50 have been outperforming the top 50 stocks by over 60%, which is great. People have talked about the broadening trade and other stocks starting to do well, which is wonderful. But when you see that kind of outperformance, that can be alarming, because in years like 2001, 2, and 3, in 2022, the overall year was red when we've seen such a divergence and outperformance in the bottom of the index. So there are one of two things that are going to happen. One of two things. Either those top stocks need to start doing better and rise back up and get bought, or the index average is going to drop. Just empirically, that index, the S&P, will drop down to reflect that lower quartile, let's say, of stocks doing better. So something to keep an eye on. Also, price to earnings reaction. Okay, we've talked about this. My son and I were watching earnings yesterday after the bell. We were watching NVIDIA and Snowflake and Salesforce react. And I chose those three, because it represents the semiconductor, the data center, and cloud computing, and then the software trade. So sort of a little bit of a look at tech overall and looking at how they were reacting to their reports. All three had great reports, but I want to focus in on a few things. For example, and we weren't trading, by the way, we were just observing, because trading right before, right after earnings that is a gamble. That's all I'm going to say about that. If you like to gamble, then go for it, but that is absolutely not the way to trade or invest. So please have more discipline than that. But NVIDIA's earnings were amazing. These guys killed it, okay? They reported $78 billion in revenue in the quarter. So over 12 weeks, $78 billion in revenue. They've got gross margins at 75%. They've got net margins at 63% after paying all their expenses. They are netting out 63% of 75 billion in one single quarter. Their outlook and performance obligations remaining are just incredible. But the stock this morning has been selling off. It's down over 4%. And the software trade overall is being bought. So NVIDIA sold off and semiconductors being sold off, and the software trade is being bought. So my question is this: what is going on? Because software, as we know, has been the most hated sector for the last couple of months. And the narrative is that artificial intelligence is going to kill software. And yet we see this extreme move this morning from a stock that is proven in NVIDIA with incredible business, incredible numbers, a moat to competition that's unbelievable. That is being sold off sharply. And suddenly the market has changed its mind about software. I This makes me wonder, and so I'm just going to tell you what I'm thinking. My read through on that is that the market it's a forced move. It's not natural. It doesn't feel natural. It's a forced move. And my read through is that the market is assuming that the market has to keep going up, and that it's looking for the next area. It's looking for the next leadership group for it to keep going up. And all I'm going to say about that, and I get that because we're coming out of a couple of years of a great bull market, and people that got into trading only a couple of years ago with COVID and all of that have really, only seen really positive results with, a pullback, which could easily be ignored. But I'm telling you right now that if just a reminder, or if you're newer to this, that the markets do go down. Markets will enter a bear market for a prolonged period and they will drop. So all I want to ask you is, what is your plan? If today that bear market began, what is your plan with your current portfolio and going forward? Okay. And it's not fun to think about, but it's the first thing that I think about every single morning when I get up, because I prepare for the worst, but I expect the best and I'm always ready. So, what is your plan if today were the first day of a bear market? That's the question. Now, let's move along. Jensen Huang, the CEO of NVDA, said an interesting comment yesterday in the conference call. He talked about the difference between um, biological and digital employees, saying, it was just an interesting comment that caught my ear, that the world of today is increasingly a combination between us, the biologicals, and AI, the digital employees, and that mix. And what is that mix? Let's talk about job growth and job loss, which was my next sort of, thought into this, is that we're seeing job growth in the lower and middle income groups due to things like the government deporting workers, the government focusing on creating manufacturing jobs. We're also seeing job losses in the upper income cohorts, in knowledge workers, in the white collar jobs, because those are the jobs that are being replaced right now by artificial intelligence. It's so easy. It's a no-brainer, accounting and all the number crunching jobs and analysis can be done by AI right now. And so I'm just calling this out because that comment from Jensen Huang about the world of today and tomorrow with the digital and the biological employees, and then the structural shift that we're seeing already, in the balance of those two, and the structural shift from job growth in the physical jobs and job losses in the knowledge worker jobs. So again, something to consider going forward. And then I want to talk about the market versus the economy. And this is going to be a reminder for some of us, going back to Econ 101, but the economy, okay, by its definition, is the production, distribution, and consumption of goods and services. Okay, that is measured by the metrics such as inflation and unemployment and gross domestic product, GDP. And those are the numbers for the economy. Now, the market is what we invest in and trade in, and that is centered around the economy, but it's the reaction to the economy, and specifically what the market thinks the economy will do in the next 6 to 12 months. Okay? And so the market sectors, there are 11 market sectors, such as consumer discretionary, consumer staples, energy, technology, materials, industrials, and please know your 11 sectors. Those 11 sectors are tied to different parts of the economy, and what the market thinks with the economy going forward in the next half year or full year, that is like the alignment of the market reacts to the economy, just as the stock price will react to an earnings call. Okay, so that's how I like to. You and I have been talking about price action in stocks. Well, the same thing occurs with the market reacting to the economy. So I just want to, separate those two out and sort of, clarify and remind some of us, how to differentiate between economy and market. So I hope that helps. It helps me to always remind myself of that. And the last thing is I want to talk about geopolitical risk because I don't feel like that is being fully priced into the market right now. And I'm not being, overly, doomsday or anything like that. I just don't feel like there's enough risk being assigned to geopolitics right now. Obviously, we've got Iran and the buildup of US forces in the Persian Gulf. Um, we have the something we haven't talked about in a while, Taiwan being just a few miles off the coast of China, and what a possible blockade of Taiwan, who manufactures 90% of all of the high-end AI chips these days, what something like that could mean for the world and the world economy. Not that there's a high probability of that, but we just haven't talked about it in a while. And then something that is more immediate is Cuba. The US has an oil embargo on Cuba, has been talking about, people have been talking about that might be the next Venezuela, where the US could go in there. And then just yesterday, we had a US registered boat that was reportedly firing back and forth with the Cuban government, and people were killed in that boat. We'll find out the details of that. But the takeaway on that for me is that we've got hot tensions off the coast of Cuba, and even Russia is chiming in and commenting on what should or shouldn't be done with this. So, and then lastly is the unknown. What is it? What is the unknown of the geopolitical situation that we're not factoring in right now? India and Pakistan, Pakistan, whatever it might be. So the unknown there as well. And again, this isn't a scare tactic. This is simply being realistic that I just feel like geopolitical tensions are on the rise, but they're just not factored in as heavily into the market right now. So all of that, there we go. A reminder that travel day tomorrow and at the beginning of next week, but I'm looking forward to coming back. I hope everyone has a good weekend, and I look forward to picking things up again and continuing this journey. I appreciate you as always. Take care.